Hello and welcome again. In the previous lesson we looked at the taxation in general and tax in UK specifically. And I told you that in the next lecture we will start our first major topic, which is income tax. In the very first lesson, if you remember, I told you that there was a list of topic areas including income tax, capital gains tax, corporation and a couple of more as well. And our first topic area which we are going to look at now is income tax. Now, income tax, as you can see, as you know, don't look at this drawing and this painting for now. I've just written down the Proforma. We'll look at the board in a minute, but just let me tell you a little bit overview of that. Now, what is income tax? Income tax is simply, like the name says, that whatever we earn, whatever source of income we have to pay tax on that. So, I mean, the name says income tax, so whatever income we have to pay tax on that. Now, income could be earned in many different sources. If I work for someone, I get paid at the end of the month, I get salary. I will have to pay tax on that salary, so that will be my employment income. Say, for example, if I have a business and if I am earning some money from the business, that would be my trading income, because I am trading and I am making some profits, so I will have to, that is also a source of income, so I'll have to pay tax on that as well. Say, for example, if I have a property and I let the property out to some tenants and I get paid some rent, so I have rental income as well, so I will have to pay a tax on that income as well. So what I mean to say is that income could be earned in many different sources, and whatever my source of income is, I will have to pay tax on that, except for some of them. Some sources of income are exempt, so we'll see later. But most of the income, whichever we earn, most of the income we have to pay tax on that. All right. So whenever we are paid, whenever we earn something, we have to account for that. We have to keep record of that so that we can tell HMRC that we are earning that much amount and we have to pay tax on that amount, because we have to account for our own selves. That is called self-assessment. We have to assess ourselves, how much income I have, how much expenses I have, and at the end of the day, how much I have to pay to HMRC, how much tax I have to pay. Now, think about in generally that we are chartered accountants, we are accountants. So we know that how much tax we have to pay after hopefully passing F6. We will know how much we have to pay tax. Say, for example, a layman who don't know anything about taxation, how will they know, how will they self-assess themselves, how will they know that how much taxes they have to pay? Now, we are made for that, so people will come to us after qualification. People will come to us so that we can advise them that how much tax they have to pay, how can they save the tax in a legal way. All right? So let's come to the topic, which is our income tax. So whatever source of income I have to keep the record of that, and I will make the total of that. Then I will have to account for how much tax I have to pay. Then I will pay that amount to HMRC. Now, that thing is called income tax Proforma, or calculation of income tax. Now, I've made the income tax Proforma here, and the same income tax Proforma, exactly in the same form, you have got in your own lecture notes, which you can download from AccountancyTube. I assume, and please make sure you have it in front of you while you do that, but don't look at the notes for now. But when I ask you to look at the notes, then you can look at the notes. And also, whenever I have written anything, because it is just a start of our course, whenever you see I have written already something on the board, don't write it now on your notebooks. When I finish the lecture, you can just pause the lecture. I will move on one side, then you can just pause the video and then note down whatever I've written here. Because if you write down first, then listen to me, then you will not understand better. So it is always better that you listen to me first, then write down whatever I've written here. Then while writing down, say for example it is trading income written on the board, while writing down trading income, then you will be, my words will be in your mind, whatever I have told you before. Alright, so it is always better, first listen to me, then always note down whatever I've written there. Another thing is that you might think that if this Proforma is already given to you in the notes, why did I write down here? Why did I bother? I mean, another option to me was, which was easier for me as well, that I could have asked you to open the notes, then I will have I would have just read the notes. But this is more effective as compared to that one, and I have written it here for a reason, so that you can note down as well. Despite of the fact that it is already given to you in the notes, please make sure you write down when we finish this lecture. Whatever I am writing down on the board, please make sure you write down when we finish this lecture, because it just takes a few minutes. All right. Another thing, if you're giving F6, and I assume, some of you might have already passed some other ACC exams. For most of the ACC exams, what we do is we take the lectures, then we go to the past papers, which are available on the ACC website. That's perfectly fine. As far as F6 and advanced version of F6, which is P6, is concerned, these both are the tax exams. Excuse me. For these two papers, please make sure you do not go to the ACC website to look at the past papers of these papers, because the past papers of ACC F6 and P6, they are old versions. They are not relevant for current exam sitting. From your previous lecture, you know that I told you that our current tax year is Finance Act 2016. So we have to read everything according to our Finance Act, which is our current Finance Act. But when you go to ACC website, then you will find the past paper in the exact form when they were published. Say, for example, if you go and download past paper of 2007, then that exam paper will be exactly in the same form when it was examined. So the tax rates will be different, personal allowance will be different, and many rules will be different, which are no longer relevant for us. Right? So that is the reason you should never go to ACC website for F6 exam and P6 exam. As far as other exams are concerned, that's perfectly fine. But for F6 and P6, please make sure you do not go to ACC website to look at the past papers. All right? Having said that, let's move to our topic, which is income tax. Now, as you know that it is our Finance Act 2016. Now, our current tax year, by the way, you know difference between accounting year and tax year, don't you? Now, accounting year, if you have passed your fundamentals level accounting year is a date. Accounting year is a date by which you make the accounts. So accounting year could be from 1st of June to whatever date you choose. So from 1st of June to 31st of December, or from 1st of January to 31st of December. So it's totally up to you. HMRC does not say, or regulations or rules does not specify a specific date. So whatever date you choose, you may choose. It's up to you as far as accounting date is concerned. All right. Now, accounting date is a date on which you make the company accounts. However, it's totally different for tax years. Now, tax year is made by instructed by HMRC. HMRC says, say for example, our current tax year is Finance Act 2016. So our current tax year runs from 6th of April 2016 to 5th of April 2016. All right. Now, some of you might be thinking that we are going to give the exam in June, whereas June 2017. Now, practically speaking, in June 2017, the relevant Finance Act will be Finance Act 2017. If you are, say, for example, if you work for accountancy practice, then you might be dealing with the Finance Act 2017 practically. As far as P6 and F6 is concerned, we will only deal with Finance Act 2016. Please make sure you do not confuse these two, what you do at work and what you do in the F6 and P6 exam. They are totally different. For our exam, only Finance Act 2016 is relevant, all right? Because Finance Act 2017 is not relevant yet until 31st March 2018, all right? Let's move to our topic then. Our tax year runs from 6th of April to 5th of April next year. So our tax year is from 6th of April 2016 to 5th of April 2017. All right. So I've just made up the name. So it is Mr. Z, whatever the name is given in the question, you will write down the name. So I've written down a made up name, which is Mr. Z. Now, Mr. Z, income tax computation, tax year 2016-17. Now, that is our current tax year. Now, why I have written down here, just to save your time and my time, I could have written while instructing you, while giving you the lecture, but it could have, taken a lot of time. So just to save your time and my time, that's why I've written everything already. But please make sure when I finish, please make sure you note down each and everything onto your notebook. All right. So Mr. Z income tax computation for tax year 2016-17. This is the income tax pro forma. Whatever I have written down here, this is income tax pro forma. In the exam, you may be asked by the examiner to make the full income tax pro forma, but chances are you might get in big questions, but chances are you will definitely going to get this get it in the small portions in the MCQs questions. You're definitely going to get something out of it, because it is very, very crucial, very, very important as far as exam is concerned. So please make sure you do listen to it very, very attentively. All right. Now, first of all, we will put the details on the very left side. So this is the details. Then the income is divided into three sections. First is non-savings income, then is savings, and then the last one is the dividend income. All right. So first one, we will put down the details here. This is not the income. This is just the source of income. Whereas we will divide it into the three sections: non-savings, savings, and dividends. Now, then we will then we'll start writing the sources of income from which we can earn the income. I told you earlier that I could have, if I work for someone, I will have employment income. I will get the salary. That will be my employment income. So I will write down it here. If I am doing the business, I will have trading income. I will write down here. If I have a property and I let the property out to some of my tenants, then I will have a rental income. I will also put that into this pro forma as well. Likewise, whatever my source of income is, I will keep writing it here. All right. So let's go ahead and read the sources of income. Now these are the sources of income, and I've listed down these here, and you can also find it in your notes. But whatever order you may choose, it's up to you. There's no specific order to write down. Say, for example, you can write down pension income first. You can write down employment income first. Whichever you want to write down first, you can. It's up to you. There is no specific criteria. All right. So let's go ahead. First one is trading income. Now, what is trading income? It simply means a business income. If I am doing some business, then I will have some income. I'm doing trading, so that's the trading income. So I will put down trading income here. We will see trading income in much details later when we move to that specific topic, because there is a separate chapter on this one, trading income. So we will see in details. Don't worry for now. So I'm just showing you the pro forma for now. All right. The next source of income is the pension income. Now, pension income, there is again separate chapter on pensions. But for now, pension. What is pension? You know pension? Now, when you work for some companies, excuse me, and when you get retired, you have worked for quite long, and then when you get retired, then a company pays you some pension. Now, the companies, it looks like company is paying you the pension, but it is the amount which you contributed while you were working. If I am working for AccountancyTube deducts £60 out of my salary every month. Say, for example, if they deduct £60 out of my salary every month, and they say that they are contributing this amount towards my pension, so that when I get retired, then I get that amount. All right. Now, there are few benefits of pension. We will see later what the benefits of pensions are. But for now, this is the pension. So what is pension? If I work for someone, then I contribute something out of my salary towards my pension. If I contribute, I can contribute but my employer can contribute as well. If my employer is too kind, they can say, all right, okay, we'll give you £2,000 of salary per month, say for example, and we'll give you £500 towards pension, or £50 towards pension as well. Right? So employer can pay as well, and you can. So it's, it can be in either ways. Right? Now, this is pension with my employer, but I can set up my own pension as well with my bank. Say, for example, I go to my bank and I ask them that I want to make my pension. Then they will say, all right, give us some amount every month, then we will make your pension. Then I put money in that, and then I will get the pension as well. All right? So this income could also be, this could also be a source of income. So if you are earning some pension, if you are getting some pension, then you will have pension income as well. Next source of income is property income. Now, property income, the example which I gave you earlier, that if I have an extra house and I let it to my tenants, and I get paid in the shape of rent, now that is my property income. Right? And next is employment income. Employment income is if I work for someone, they pay me salary. That is my employment income. The next one is interest income. All right. Now, interest income, we will leave it for now. The next one is dividends. Now, what are the dividends, you know? Yeah, I hope that at this level you know what dividends are. Dividends are if I hold some shares in a company and they pay me share of the profit. That is my dividend. All right, so this could be a dividend income as well. Now, these are the sources of income, and we can divide it into the 3 sections. All right. Now, what do you think the dividends will go into which section? Any idea? Yeah, you're right. Dividends will go into the dividends. So we will go ahead and put the dividends in here. So dividends will go into the dividends. So X means the amount. So whatever the amount will be, so we will put the dividend amount here. All right. We will look at the dividends in more details in next lecture, but for now, dividends will go here. So if some of you might be giving this exam for the second time, if you failed this exam for the last time, then you might start to think that we used to do it in a different way previously. Forget about that. You're not living in the past. The new way to do the dividends is just to simply take the dividends amount, which will be given to you in the exam. The same amount will go into the Proforma. So no need to do any tricky stuff with the dividends. All right. Likewise, next source of income is interest income. So we used to do the interest in different way as well. If you have given the exam recently and if you have failed, forget about that. So the new easier way to do the dividends are you can just pick the dividends out of the question. You can just pick the interest income out of the question and straight away you can put into the Proforma. But the question is where the interest income will go. Now, if I am being paid a salary and out of that salary, I have some expenses. I buy food, I pay for my rent, I pay for my car and other expenses as well. But some portion I keep it on side. What do I call it? I call it savings. I'm just saving that amount. So I kept saving every month. All right. Then I thought, why am I keeping that amount at home? Why shouldn't I put that amount into the bank? If I put that savings amount into my bank will pay me some interest. So isn't it a good idea to put that savings amount into my bank instead of keeping that at home? All right. So then I went ahead and then I picked that savings amount out of my home and I put that into my bank account. Now, bank is paying me interest on that. Right? Now that is my interest income. That is my interest income coming out of savings. All right. So interest income will go into the savings. So go ahead and put that amount, interest income, into the savings. All right. Now these are only two sources of income which go into the different sections. One is into savings, another one into dividends. All other sources of income will go into the non-savings. All right. So say for example, if there is a trading income will go into the non-savings. A pension income will also go into the non-savings. Property income will go into the non-savings. Employment income will also go into the non-savings. All right. But the interest income will go into the savings because I am earning interest because of my savings. And dividends will always go into the dividends section. All right. So we'll pick the dividends and savings out of the question and we'll put the same amount into the Proforma. No need to do any tricky stuff like we used to do before if you are giving it for the second time. All right. So that's till here. We have got all the sources of income into the relevant sections. Then I will just total all of these amounts. All right. Now after totaling all of this amount, that will be my total income, out of which what I have to deduct is what is known as qualifying interest. Now what is qualifying interest? We will see later what the qualifying interest is. This is the interest which we pay on the loan. Now interest is always paid on the loan, but the loan is used for some of the specific reasons. If I take the loan and if I use that loan for some of the specific reasons, if I pay interest on that loan, then I will deduct that interest out of this income. All right. We'll see later what the qualifying interest is, or the deductible interest, sometimes known as deductible interest. So what that is, we'll see later. But for now, we have to deduct qualifying interest from these sources of income. Now, there is a specific order to do that. First, we deduct out of the non-savings income if there is if there is still left some, if there is some left, then we will deduct it out of the savings, and finally we'll deduct it out of the dividends. All right. Now after that, after deducting that, the income will be called net income, but it will be before personal allowance. All right. Then we'll go ahead and put the then we'll go ahead and deduct the personal allowance out of that here, just like you can see here. So then we will deduct the personal allowance. Here. All right. Now again, for personal allowance, we will first deduct it out of the non-savings income, then from savings, and finally from dividends. But hang on, what is personal allowance? We haven't heard this thing before. What is personal allowance? Do you know what personal allowance is? Now, why are we paying tax? We are paying tax because government thinks we are rich people. All right? If you can prove to government that you are not rich, you are not earning much money, then government will say, all right, you don't have to pay any tax. All right? Now, say for example, if you're earning less money, then you will not have to pay any tax at all. Now, what is personal allowance? Personal allowance is the amount which government says if you're earning up to that amount, then you don't have to pay any tax. So if you're earning up to that amount will be exempt. On top of that, whatever is on top of that, you will have to pay tax on that. Now, what is that threshold? For our current year, which is our Finance Act 2016, personal allowance is, you can write it down as PA. Excuse me, our personal allowance is £11,000. That is our standard personal allowance. So personal allowance, if you're earning up to £11,000 per annum, it is per annum. If you're earning £11,000 per year, then you don't have to pay any tax. If you're earning on top of that, then you will have to pay tax. Now government thinks that 11,000 is sufficient enough to bear the expenses, to pay the rent, to buy the food and all that, because it is enough for someone to survive. If they're earning more than that, then they should pay tax. All right. So that is called personal allowance. So every individual in the UK is eligible to claim to have the personal allowance. There is no need to claim. Every individual will have a personal allowance in the UK, and that is £11,000. All right. Now what we do is we deduct the personal allowance out of the net income, and the preference again is exactly like qualifying interest. First we deduct the personal allowance out of the non-savings income, then from savings income. That's why I've written down as second. Second preference is to deduct from savings income, and the last preference is to deduct from dividend income if there is any left. All right. Now after deducting the personal allowance, the net amount will be called taxable income. Now this is the amount on which we have to pay tax. That is why it is called taxable income. Now we know that it is taxable income, but how can we pay tax? Do we know any tax rates? Yeah, we know tax rates. Now if you go to your notes, please, where you find on the first page where you will find the Proforma. On first page you will find the Proforma, just like the one I have shown you here. Just beneath the Proforma you will find the tax rates. All right. Now them are the tax rates which will be given to you in the exam. That is a good news. This tax table will be given to you in the exam. And this is the criteria by which we have to pay tax. Some of them are 20%, some of them are 0%, 0%, 40%, 45%, 7.5%, and different rates. All right. So this is the table which will be given to you in the exam. Now we will calculate the income tax according to that table. We will see in our next couple of lectures. We'll do a couple of examples as well. Then we will understand it better. But for now, because we are looking at income tax pro forma, so we will assume that we have calculated the income tax. All right. So that is we are calculating the tax liability. All right. So we will that is our source of income. All right. So that is our taxable income, and this is our taxable income as well. So we'll total that. Then we will deduct what is known as deducted at source. All right. So tax deducted at source. Now, what is tax deducted at source is that tax which you have already paid. Now, say for example, if you check your pay slip, on the pay slip you will have gross salary, then some deductions, and end of that there will be net salary. Now, them deductions are the taxes which you have already paid. All right. But the employment income which you have written in the pro forma here under employment income, that will be the gross amount. That will be the gross amount. but some tax you have already paid. So that is the tax, PAYE, which is pay as you earn. That is the amount which we will deduct out of here. All right. Now this is the amount you have already paid, so that's why we have deducted it out of the income tax liability. And the final amount which will be here, that will be our either income tax payable, or if you have overpaid the income tax, then you will have to recover it out of the pockets of HMRC. All right. So either it will be income tax payable or receivable if it is coming into the negatives. All right. So that is our income tax pro forma. If I just move on one side, if you could please note down this, pause the video here and please note down. I assume that you've already noted it down. So that's it for this lecture. This was our income tax pro forma. In the next lecture, we will look at some of the sources of income which I have listed down here, like interest income and dividends. All right. So we will do some questions as well. Please make sure you buy a practice and revision kit and keep it in front of you, because we will use that while doing the lectures. I may ask you to open up the exam kit and do the questions. All right. So that's it for now, and I will see you in the next lecture with more interesting stuff. Thank you and goodbye.